And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Monday, October the 25th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to be looking to find some good context in these markets. I hope that you're having a better morning than I am. I've had a little computer problems. I'm not going to be able to present the charts again this morning. I thought I had that all figured out by just after the forecast on Friday. But apparently I did not. So we're going to make sure that we have this all set up and solid for us for tomorrow morning. But we're just going to try and get through what we can. Somebody mentioned Friday we just have to do our charts in crayon. So we'll try and do that again today. And again, my deepest apologies. Consistently, I think, getting attacked by technology. There are no major releases today, unless you're looking at earnings. We do have the FAANG earnings coming out this week, so no majors as far as economic numbers due out this morning. Tomorrow morning, 8 o'clock, we do have some home pricing indexes coming out, new home sales at 9 o'clock tomorrow, consumer confidence at 9 o'clock. Wednesday, durable goods orders, international trade, EIA petroleum status report, as always on Wednesdays, barring any holidays. Thursday, some big numbers. The GDP numbers due out, as well as jobless claims, pending home sales. Lots of homes information coming out this week, and of course, GDP is the big one. Next week, of course, we know Wednesday we have the FOMC meeting, and then Friday, employment cost index, personal income and outlays, Chicago PMI, and the Michigan consumer sentiment. So just kind of looking over what we are looking at this morning and get the crayons out. Yeah, those gremlins are just killing me, but I am going to work tirelessly today to make sure that we are solid moving forward. So this is a big week in earnings, long lists of earnings. The FAANG stocks featured in this week's earnings schedule. Facebook this evening. Microsoft and Alphabet tomorrow after the close, Apple and Amazon Thursday after the close. It's a lot coming out this week. U.S. stock indices set to open a little bit higher, I think. Yeah, maybe something like that this morning with the Dow and the S&P off fresh contract highs. Crude prices show no signs of relief as demand continues to outweigh supply. Headline risks are plenty as the uncertainties in the world and in the economy and in the government continue. Washington continues to weigh this spending bill. So we all got to keep our eyes and ears open, that is for sure. Make sure you like, share, comment, question, feedback, and heckling is certainly in order this morning. I keep waiting for our good friend Fred Decker to come in and mention that the Packers won this weekend and the Bears lost. The Packers won. Was a really good game. I watched part of it, but the Bears just really seemed to roll over. And I think Aaron Rodgers is probably losing a little bit because he says he owns the Bears. It was a bad joke. All right. So looking at the VIX this morning, it's actually up 2% with stocks off, I think, just a little bit. I can see my charts, but you guys can't. It's upsetting. It's very upsetting. Yeah, so VIX up actually 2%, with the S&P is looking like they are going to be opening higher. I find that interesting. Again, new all-time contract highs yesterday, or Friday, I should say. Dollar index up slightly, 93.86. And the yield on the 10-year continues to creep higher, 1.66. Good morning, everybody. As always, got to say hello. Andelson, first in the room, you win the prize. Rick, you're a close second. Jimmy, Brian, Drew, Zerain, Spencer, Vince, Daniel, Alfred, Jason, Harry, good morning, Robert, Janus, Tyson, get the crayons out is right. Jimmy, these gremlins are killing me. George, next week, let's go. Mikkel, absolutely. Mert, Himmert, Gummus, good morning. Nat gas is flying after testing daily settlement. Thanks for your valuable analysis on nat gas. Good. I'm glad that you feel as though this is helping you. I think that 590 is good point to consolidate the profit. Nelson, good morning. Jerry is awake. Patrick, we do have group coaching today, as we do on every Monday and Wednesday now, 1 o'clock Central. There's the link so you can register to join me. We will be seeing charts and lots of good questions for group coaching today. As always, we've got a couple of nice emailed in questions from Fred, as well as a couple of other ones. Always looking forward to those. Now, as far as our charts are concerned, again, I apologize. Not going to be able to provide those, but in crude oil, we see that there are weekly kickoff high, which is 84.70's weekly kickoff high in crude, 80.50 weekly kickoff low. Not only did the program crash, the computer took all my stuff off, so I've got to start over and redo that. But our weekly kickoff high is being tested early. No real help from open interest, falling largely since rollover. We lost 7,000 on Friday, although upside structure does remain. There's a late spike on Friday, late spike alert. If we open in or above the late spike, that means acceptance of higher pricing. Not a surprise in crude oil lately. Means we look for opportunities to go in the direction, in the continuation of that. If there's a gap close, that can change things. But we do have a late spike in the crude oil. The S&Ps, we need a little light profit taking perhaps on Friday. We did lose 5,700 in open interest. Big earnings this week, so we're going to be, of course, paying attention to that. We've got government spending bill is pending. GDP numbers Thursday. We're in a 3-day balance here. And the balance rules are, as long as we remain in that balance, we fade the extremes. We sell the high, we buy the low. We sell the high, we buy the low. If there is a substantial breakout, if there's a breakout that is accepted, we go with the breakout. With all of this pending information, I'm kind of thinking that this market might remain somewhat range-bound. And now that I've said that, it's probably not going to happen. The overnight, we're really inside the value area. We're inside range. We don't really have much overnight inventory with which to speak of, so I'm going to be trying to remain patient and wait for the extremes of the 2-day balance that we are currently in. 45.15, the lower end of that balance. The higher end of that balance, 45.50, 45.51. Ish. Lacey's getting a little crazy in the kitchen. No overnight inventory, balance rules, just the main things I wanted to talk about in the E-mini S&Ps this morning. Nasdaq is in a 4-day area of balance. Nasdaq has not been able to put up a new contract or all-time high. The balance that it has fallen into is, I mean, if you think about it, it's probably in anticipation of some of the tech earnings that are coming out. Remember balance rules. While we're inside the balance, when we get to the upper extreme, we look for opportunities to try and find some cheap shorts up there. When we're near the low of the balance area, we're looking to buy, trying to find some cheap longs down there. And again, if there is an accepted excursion outside of the balance area, we go with that. The 30-minute chart in the Nasdaq, inside balance and value. Stay patient. Remember balance rules and breakout rules apply. Do we have maybe some overnight longs in the Nasdaq? It looks a little bit more likely than in the S&Ps. I would sure wish I had my charts, and I'm sure you do too. Okay, multiple time frame upside structure intact. Medium time frame, not multiple. You see, we've been putting up higher highs. We've been putting up higher lows. Our weekly kickoff levels for gold this morning are 1825. So just up here. And, well, you can't see it. And 1767 to the downside. Those are the levels that I believe longer, stronger participants will be more likely to enter the market with a little bit more force. Leaning towards, well, we open interest on higher high volume. We had a pretty good stab to the upside on Friday that didn't really maintain, but it was a lot of volume, and we added 20,000 in open interest. So there is some energy coming into this market. Overnight longs inside the value area. Don't forget that 1807 to 1809 level, which it has been an important level for a number of weeks or months here. The dead letter opener for the Nasdaq. Yeah, sorry if I didn't mention those. 15,574 to the upside, 14,727 to the downside. Those are the weekly kickoff levels for the Nasdaq, and thank you for reminding me to put those out there. In gold, I'm leaning more towards trying to buy weakness. Weakness is kind of going to be a little bit difficult to come by, as we are currently testing getting close to testing that 1807 to 1809 resistance area that we took a look above on Friday, but we did not find what we were looking for up in that area. Let's take a look at the euro real quick, and we can get everybody nice and prepared early for their trading day. We had a 4-day balance as of this morning, and it was at risk of being penetrated to the downside. If you could see this, or if you're looking at the euro on the daily, you see the 4-day balance area. Once that area was accepted below, we're seeing sellers coming into this marketplace. It's just how balance to trend kind of creates. You get the breakout. If the breakout is substantial, if there's volume, if there's participation, if there's momentum, we're going to go with the breakout. All right. So to take a quick look at the 30 here. We're seeing a breakout to the downside of that 4-day balance area. I'm just so aggravated that I don't have my charts so that we can see all these things together. The 10-year, for the euro, the weekly kickoff levels are on the upside 1,1700 and to the downside 115.48. The 10-year, 131 and 15/30 seconds to the upside and 130 even to the downside. We've seen some rejection off the recent lows. However, downside structure is still intact, and we've been seeing the yields kind of creeping to the upside, keeping some downside pressure. I think that we're looking to sell strength in this market until proven wrong. No overnight inventory, no gaps, 2-day balance. I'm going to focus on the extremes in the 10-year, Thursdays and Fridays extremes for opportunities. And the Nasdaq, the natural gas. You were mentioning nat gas. Nat gas has another weekend gap. I wish we could see this together, but another weekend gap, which has created a 5-day island low. Island highs and island lows are very strong reversal patterns. We've been coming off the high. It seemed strange last week to be thinking about, a reversal pattern in the head and shoulders with price moving lower as we're coming into the colder weather. We've now left a island low. The market currently trading up to and testing weekly kickoff high, which is $5.80. Weekly kickoff low, $4.87. So got a pretty good test of what's going on up against an important inflection level after a second in a row weekend gap that created an island low. Technically, this market is breaking the structure to the downside that it's been in for the last couple of weeks and potentially bringing more upside movement to it. So you nat gas traders, be tough. It's going to be, if we break out and we start really moving higher, getting into trending markets has always been a challenge for me. You're usually going to look for high and low volume nodes in the volume profile if this thing does become directional to the upside. Again, we're still looking for a true breakout above that weekly kickoff high. We've not seen it yet, so we're still using that as resistance. But if we can bring some business up and bring some new buyers up above that level, I think there's some substantial upside momentum that could come into this market. So those are just my thoughts, not my charts, not the charts, not your charts. Just some things to think about early in the week this week. And, I look forward to seeing you in group coaching. We can maybe see what we're looking at. It's a different computer, and I'm going to be certainly diligent in making sure that this does not happen again for us tomorrow. I appreciate everybody hanging out with me for a little while. Looking forward to hanging out with you a little later on as well. And I'm going to take my deep breath and be ready. Humble, grateful, and creative in your trading. Mikkel, we are already working on micro gold. And that's Spencer talking about Natty kissing the bottom of that edge of that upward channel that it fell out of a few weeks ago. Yeah, absolutely. Absolutely. It's going to be an interesting day. Spence, my pleasure. Good luck, and thank you, Dead Letter Opener. Trade well, everybody. Looking forward again to group coaching, and tomorrow morning, I promise we'll have the charts. So be careful. Think risk first. Manage that risk. Always wear a stop, and I will see you at 1 o'clock for the group coaching. Until then, trade well. See you in the pit in about 10 minutes. See you later.